Good afternoon, boys and girls. It's Liberty Call for Tuesday, February 22nd, 2022. Hope everybody's having a great day out there. It is a bit chilly here in Colorado. It's a, let's see what the temperature is right now. It's a balmy 4 outside. So I was outside a little while ago scraping a little bit of snow off the driveway and sidewalks. So my hands are frozen and my body's kind of hot. So it's kind of a weird sensation at the moment. So all right, well, let's go ahead and dive into everything going on in the markets today. With everything going on with Russia, Ukraine, the markets are a bit spooked right now. The Dow Jones finished down 1.42% at 33,596. The S&P 500 was down 0.99 at 4305. NASDAQ closed down at 1.23 down at 13,381. Small caps are also down 1.37. The VIX was up 3.82. Closing at 2881. Looking across Europe, it's kind of mixed. Some up, some down. Certainly, let's see here, and it looks like Eastern Europe was up. A lot of 1.5s, and but Budapest was down 3.5. And then we get into the Asian markets, nothing but red, pretty much all the way down. So not the best day for February 22nd in the markets, but hey, things happen. So, all right, well, let's take. I got 3 articles. I'm going to keep this pretty brief today. Oil settles off highs after new U.S. sanctions on Russia, written by Bharani Krishnan from investing.com. The counter trade is present in almost every trade, though its significance always depends on the strength of directional trade. In Tuesday's crude trade, prices rose, but not in a straight line, as some traders kept open the option that Russian oil and other energy exports might not get strangulated altogether by Western sanctions against Moscow for its backdoor invasion of eastern Ukraine. President Biden announced that the United States has imposed full blocking sanctions on 2 Russian banks, on Russian elites and family members, and on Russia's sovereign debt. So it looks like, we've done some minor things to a few people in the Russian or in Russia to try and, squash this now, but we'll see. WTI, West Texas Intermediate, was settled up $1.28 or 1.4% to 92.35. Brent, the London oil benchmark for oil, settled up $1.45 or 1.5% at 96.84. All right. So many had expected crude prices to breach $100 a barrel on Tuesday upon news of Russia's invasion into Ukraine. Russia's parliament approved troops for a peacekeeping operation in 2 breakaway regions in eastern Ukraine that Moscow formally endorsed earlier in the day. Columns of military vehicles, including tanks, were seen on early Tuesday on the outskirts of Donetsk, one of the occupied territories. So we'll see where this goes. I'm not overly worried. I think a lot of this is more just chest pounding. So we'll see where that goes, but it's good to see oil didn't spike too dramatically. All right. Next article I got here is waiting for the perfect moment may not be the best strategy. 3 things investors should do right now as Ukraine-Russia crisis escalates. So, and this was who wrote this? Jacob Passy. This is from Market Watch. All right. So the first lesson here is take a lesson from March 2020. The most important advice, according to McBride, is literally to do nothing and don't panic. Probably good advice there. And here's far from the only financial expert to suggest that. Typically in situations where the stock market's in a slump or where it's behaving erratically, the best course of action is often just leave your money where it is, said Jacob Channel, senior economist at LendingTree. Never sell in a loss. Well, that's not always possible. For people who believe for people who are invested in index funds or stable companies, in all likelihood, their investments will rebound. Don't believe in recent history should offer some comfort. The markets fell sharply at the end of at the start of the COVID-19 pandemic amid fears of a prolonged recession. They didn't stay low for long, though. Following that sell-off, the market rebounded spectacularly, and the S&P 500 is currently sitting at a near record high, even when taking into account its recent decline. Well, see, here's a little bit of a problem with that. The Fed printed like $4 trillion. So that did provide a lot of lift there. Review your investment plan. For most investors, the money they have in the market, either through retirement accounts or individual investments, is intended for long-term purposes. So short-term fluctuations shouldn't change one's strategy a whole lot. So that's definitely a good piece of advice. And also putting your cash to work. A common aphorism among financial wizards is to buy the dip. In other words, think of the stock market as being discounted right now. Depending upon your age and time horizon, this may be a time to buy into the market while it's still on sale, said Charles Sachs, Director of Planning and Chief Compliance Officer at Kaufman Rosen Wealth. So, I don't know. I mean, it's I think I would if I was providing a suggestion, I would probably suggest holding off until things settle down a bit. Volatility is certainly going to continue for quite a while. All righty. And then the last article I had here, like I said, this is going to be a quick one today. Considering joint financial accounts with your partner, here are some tips. This comes from Amy Poulter. When it comes to mixing love and money, it's never too early to never too early to talk to your partner about their spending habits, credit scores, debt, savings, financial goals, budgets. No topic is off limits. If you ask Dominic Broadway, founder and CEO of Finances Demystified, which provides personal financial classes, Broadway said, while it becomes increasingly more common for couples to have separate finances but work together to reach financial goals, it's incredibly important that you are both on the same page if you do decide to combine finances. When you start thinking about this, when you start thinking that this person might be the one that you want to spend the rest of your life with, is when you need to start having more thoughtful conversations, including the money talk, said Yahoo Money. After all, money arguments are the second leading cause for divorce. That said, Ben Offutt, principal at Offutt Advisors, suggests a way to come to an agreement about how you will manage together. Whether you're prepping to have the talk with a partner or exploring what options are right for you, Broadway and Offutt shared some simple tips to navigate the necessary financial conversations. Broadway says the choice is entirely up to you and your partner, but she and Offutt agreed that you and your partner should make a number of basic decisions before sharing finances. The two of you should figure out which expenses will be paid jointly or individually, whether you have a budget around certain expenses and who will actually pay the bills, and if your joint credit cards will be paid automatically or manually. Discuss your earnings as well as your spending habits. It probably sounds obvious to some, but Broadway said being upfront about your earnings and how you spend your money and how you pay your debts is a must. We live in a society that has made money conversations taboo, but it is critical to your relationship to be open about your earnings as well as your spending habits, she said. Offutt said you should create a spending allowance that is agreed upon by both partners. What type of accounts should you share? While Broadway says there's no rule of thumb, you'll have to make decisions based on conversation with your partner. The idea is to have a conversation with your partner to determine the best way to manage your finances as a couple to reach goals. And should you set any spending rules? Credit cards can be tricky, Broadway said, so proceed with caution. Rules should absolutely be considered, especially if you have a partner who tends to overspend or rack up debts faster than you prefer. Broadway said, if you are comfortable with your partner's spending patterns, Broadway said sharing one credit card can be a great way to ramp up points. When it comes to sharing credit accounts, there are a few things you should know, such as your financial responsibility to cover your partner's purchases if they miss or don't make a payment. If you add your partner to your account, set spending limits that you're comfortable with. It might not be the first thing you think of, but Offutt recommends setting a comfort level for the amount of cash you keep in your account and how to establish how much should remain in your emergency fund. How to discuss money woes. As with successfully navigating any part of your relationship, communication is key, and even more so when it comes to finances. I had a client who told me that every time she tried to have a money conversation with her spouse, he would shut down. Oh, that's a shame. All right, so that's definitely some good ideas. I would definitely recommend from my former career as a debt collector, I wouldn't have joint credit cards. My wife and I have been married for almost 26 years. And we still don't have joint credit cards. It's just a good way to keep everything clean, keep everything on just one person's credit report, especially when it comes to plastic. Houses and cars, that's not a big deal. Obviously, since in most states it's community property, but keeping credit cards, in one person's name or another that would probably be my best tip when it comes to those sorts of finances. So. All right. Well, that's everything I had for today. I managed to keep this under 10 minutes. Wow, that's amazing. So I'll be back tomorrow with Wednesday's Liberty Call. And if anybody needs anything from me, don't hesitate to drop me an email or drop me a phone call. So hope everybody has a great night, and I will be back tomorrow. Bye-bye.